Hey guys, welcome to part 2 of POI and order blocks. In this video, I'll be going into the differences between POIs and order blocks. This video will actually be quite short. I just wanted to make a separate video so you guys have a better understanding before we hop onto the actual charts. Alright, so essentially POIs and order blocks are two of the same things. It just depends on how you view it and go about it. It also depends on the type of trader you are. So if you're a swing trader versus a scalper, some people might not use POIs. If you're a swing trader, for example, your order block is basically the intraday or scalper's POI. For traders that have more intricate entries, you're the ones that will be using POIs. All right, so your POI is basically a higher time frame order block. It's where you would keep an eye out for a break of structure and shift in market structure on the lower time frames. After the market has that BOS or shift in market structure, then you would look for your order blocks and wait for price to return to the order blocks where you would essentially buy or sell from. All right, so let's say this right here is your 1 hour time frame. Okay. And actually, let me mark it over here. This would be your POI, point of interest. And this right here, and this right here would be your order block. Okay. So this area is going to be your point of interest, right? It's going to be your 1 hour time frame, and your order block is going to be on the lower time frame, which is, well, it could be anything. It could be the 15-minute, it could be the 5-minute, it could be the 1 minute. For this example, let's say it is the 5-minute time frame. All right. Okay, so order block. All right, so let's say on the 1 hour time frame, right, price is bullish, creates a higher high, a higher low, and then a higher high, and then price returns to your POI. Okay, so your POI would be, let's say this is your POI. Okay, so let's say this right here is your POI, right? And price returns to this area right here, and then, okay, so let's say it looks like this. All right, this is your POI right here. Essentially, this is the area where you would keep your eye out and look for that market shift or that break of structure on the lower time frames. Okay, so let's say this area right here, let's say we break it down to the 5-minute time frame. Okay, let's say I take this over here, expand it. All right, let's say this right here is your POI. Okay, that right there is your POI. And on the 5-minute time frame, obviously, as I mentioned in the structure video, it would have its own structure, right? So on the 1 hour, this is just a retracement to your higher low, right? To later move price higher. Okay, so on the 5-minute, however, price would have to break structure and move bearish short term to come into your points of interest. Okay, so let's say, let's mark out this over here, right? So this is your, okay, that high, break of structure, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower low, and then let's say you got your break of structure. Okay, so this right here would be your break of structure, and then price pulls back into potentially your order block. Okay, so this is basically after that break of structure, right, which is right here. This is where you would look for your order block and essentially where you enter long positions, right? So you would buy from the order block and then towards that high, right? So this high over here, and then boom. Price pulls back into your order block to later move higher. Okay, so this is basically how smart money traders get those high risk to reward setups. Okay, so they look for their point of interest. Once price mitigates that area, they would go on the lower time frame and look for that break of structure and pull back into their order block where they would enter buys from. Okay. All right, so now let's jump into the actual charts and break price down.